Hello. Good morning. Welcome to the July 17, 2024 live stream. Alright, so coming in today, let's look at the economic calendar here. So today is Wednesday, July 17th, so we don't have any red folder news here during the New York AM session, or just in this day, so current, like in general. So overnight, we had a pretty big drop during the London session. So during the London session, we took out previous day low and previous week's low. And let me go back to my weekly market my weekly market outlook here to show you guys what I was anticipating for this week on NQ at least. So coming into this week, we have created a weekly fair value gap on NQ. I am anticipating for us to rebalance that weekly FEG based on the fair value gap theory. So my objective this week was for us to rebalance it, right? What did we do during the London session? We rebalanced the weekly FEG. And with that in mind, I can see us take out previous week's low this week. We also have SMT with ES at the high, so the idea of trading lower is higher probability. If we do trade into the weekly FEG, I would switch to trading lower time frame models. So let's say prices were like around here when we came into the New York session, right? That means I would have been able to get us, outlining trade to target previous week's low. But I was asleep during London session, and this occurred overnight, and stuff like this happens. So after we take out previous week's low, I don't want to be trading any higher time frame. I don't want to have bias on the higher time frame, because like right now we can still after we rebalance this, we can trade higher or we can trade lower. To me right now, it's still like I said, the weekly objective has been taken out already, so I'm not gonna force anything, and I'd rather not force anything here, just based on this 1 hour time frame right here. I would have liked to see us take out this 8-hour low if we close bearishly like this on the 8-hour time frame. At least on the 4-hour time frame, we can anticipate this 4-hour fair value gap here that will get created once this 4-hour closes to act as a breakaway gap, and for us to take out the 4-hour low first, and then we can see some sort of retracement or rebalance of the 4-hour FEG. But like I said, right now I don't have any higher time frame draw anymore, because we have already completed that during the London session, so I'm not going to force anything here. We do have, we can target this. We have this low to the left of us here. This low is July 3rd's low, so let me mark that out. $7.3 low. So that is the low of day for July 3rd, and we can have that as a target coming into this morning, but like I said, the weekly low has been taken, so I'm not going to be trading anything based off of the weekly objective, because like I said, we have already completed that. So now I would rather just wait and see what price action gives me at the 10 o'clock open. That bell right there that you just heard was the 8:30 or the 9:30 market open. So let's see what we do from here. We do have this 30-minute FEG here that we did respect, which is good, because if we are bearish, we want to see respect to CIBs. So we respected the consequent encroachment, and now we are displacing lower if we can create this 30-minute fair value gap here. And like I said, displacing lower is us creating fair value gaps with the leg lower. Here's the 15-minute time frame. Like I said, I don't trade the first 30 minutes because that's just a time. I don't like that time window. It's something I would just stay away from. I'd rather not trade that. And for me, if we get a closure above this 30-minute fair value gap here, then I would like to see us rebalance this 1 hour FEG here. That's only if we can close above this 30-minute FEG. If we don't close above it, then I'm not going to trade any long trades. But like I said, if we do get a closure above this 30-minute FEG, I would consider trading longs. But as of right now, nothing. Let's see what I do have for agenda this coming into today. So I'm going to go over my risk management plan and my list of improvements I could do this week. So I'll do all that thing. I'll go over that. So things I can improve on this week. I said I can follow my risk management plan that I'll go over after this. And I will go over the risk management plan beginning of each live stream this week. So I'll do that. I want to follow my trade plan thoroughly. Like I said, my trade plan being like something like this. This is the trade plan. After we take out weekly fair value gap, I would switch to trading low time frame models. We are still bullish on the weekly time frame. So what I mean by that is prices have if we are bullish, right, on the weekly time frame, which we are, that weekly FEG that we just traded into should be respected on the weekly time frame. So even though we are trading below it right now, this is the 1 hour time frame. We're trading below it, but by the time next week, or by the time this week's close, we should be above it. But if we aren't, then that means we're bearish, and we're probably gonna seek for lower prices. The third thing I can do here is I can stay more composed during my trades. I can practice breathing exercises. I want to have clear thought. I want to have a clear thought process, and I want to be content with the outcome. So I just have to follow my strategy and be content with it being a winner or loser. That shouldn't be a priority of mine. My priority right now is just to follow my trade plan and my risk management plan. And with that is the things I could improve on this week. So let's go on to the risk management part. So like I said, July 3rd's low is the draw right now. Is the draw, I believe. Just looking at the higher time frame dealing range here. So there's this weekly low here that we traded away from after tapping into a weekly fair value gap, and this weekly high. This is all-time highs currently. And notice how we respected the -2 to -2.5. This is usually where retracements occurs. So just pay attention to how we are trading in discount of the range, and we are about to reach the OTE of this range as well. So July 3rd's low actually lines perfectly with the 0.62 of the dealing range, which is basically OTE. So they said July 3rd low is my draw of liquidity coming into today. I do want to see how we close here on this 4 hour time frame, because depending on how we close will tell me if we retrace or not. So if we are to close right now on 4 hour, it is more likely for us to take out this 4 hour low than retrace into this 4 hour FEG, if that makes any sense. I want to see us take it out to 4 hour low first, and then, you know, if we retrace or you know, we just continue lower. Think about that. Really think about what I just said there. Because that means if I know if we aren't going to retrace into this fair value gap, that means I can treat this fair value gap as a breakaway gap. A breakaway gap is basically we're going to leave that fair value gap open, and we're going to complete our objective first before retracing back into it. It's whenever you see breakaway gaps, that just means that we are extremely bullish on or bearish or bullish, depending on what type of breakaway gap it is. It could be a SIBI or a BISI, but in this case it is a SIBI, sell side imbalance, buy side inefficiency. So that tells us a lot. So like I said, we still have like 24 minutes left to the 10 o'clock hour, and during that time I will be going over my risk management plan. So risk management by myself, position sizing for the eval stage, and this slide specifically is I'm going to be trading micros aggressively. I don't trade minis. The way I trade is very dependent on micros, because I like taking partials, and minis during the eval stage they gave me 5 minis to work with, and 5 minis is equivalent to 50 micros. And it's a lot of risk, and whenever I trade with micros, there's a little bit more wiggle room there. So okay, so my first trade of the day, every single day, if I'm trading aggressively, if I decide to trade aggressively, which I will be trading today aggressively, my first trade will always be a $480 maximum stop loss or $120 maximum stop loss, depending to risk to reward. So if it's a 1-to-1, then I'll be risking 480. If it's a 1 to 1.5 or higher, then I'll be risking 720. Second trade, it goes, if I win my first trade, then I'll be risking only half of the profit gain for my first trade. So let's say I make 600 for my first trade, right? My second trade, I'll be risking 300. If I win 900, then I'll be risking 450 on my second trade. But if I lose my first trade, then I'll be only risking 240 maximums, $240 on my second trade if it's a 1-to-1 risk to reward. But if it's a 1.5 to 1 or higher risk to reward, then my maximum stop loss will be 320. And my third trade, if I win my second trade, like I said before, it follows the same style. If I make 500 on my second trade, then my third trade I'll be risking 250. Pretty simple. But if I lose my second trade, then $120 is my maximum stop loss for my for a trade that's a 1-to-1 risk to reward. And if it's a 1 to 1.5 or higher, then 160 is the maximum stop loss. I'm not going to take any models that is below a 1-to-1 risk to reward, and my risk to reward should be set to where I take my first partial. So let's just say I take this trade right here, right? Let's just say this 4-hour close right now. I take an entry. I my terminus is July 3rd's low, right? But I'm gonna be taking my first partial off I'll be taking my partial off at the 4-hour low, because that's the very easy objective, to target that 4-hour low. Notice how I'm not setting my risk to reward at the July 3rd's low, because that's not where I'm taking my first initial partial. My first initial partial is gonna be at that 4-hour low right here. So that's what I mean by R to R should be set to where I take my first partial. And when I take my first partial, stop loss will be moved to break even. And when taking a partial, I will take off half of the position size. So let's say I come into that trade with 20 contracts. I'll be taking off 10, and the next partial will maybe, like, let's say like the range from this 4-hour low to the July 3rd low. I'll take off, like, so let's say I take off 10 at the 4-hour low. I'll take off 5 here because 5 is half of 10, and then I'll take off another I'll take off full position off at July 3rd low because that's my terminus of my trade. Yeah, that's about it. So original size, let's just let's redo that. Original position size is 20. I'll take off 10 at the first partial, move stops break even, and then my next TP, my next partial will be, I'll take off 5, and my terminus, I'll just close the whole trade off. And that's when that right there was me trading aggressively. There are days where I will be trading de-risk just for eval stage as well too, where I trade passively. I will be de-risking, and days like this, I'll make a video separately on my YouTube channel going over when I will be trading passively. But here you can just see, the numbers here, about the same template, just the numbers are a little bit different. And when taking a partial, I'll be taking 2/3 of the position size, not a half, at the first partial, and I still move stops to break even. The original position size, let's just say for example I have an original position size of 20. I'll take off 13 instead of 10 here, and then I'll move stops to break even. Next TP will be I'll take off 5. And with that is all for my risk management. Little portion of this live stream. Let's see what else I can do here. So we are getting relatively close to this July 3rd low, so I'll move it here. And like I said before, if we take out July 3rd low, then where else how low can we see? So whenever you ask the question, how low can prices go, you can always set up standard deviations, which is why I love using standard deviations. So there's that standard deviation there. There is this one. I'd probably use this one just because it aligns with the July 3rd low, how -1 aligns with it. You can also go like the bodies of the candle. Let's see if it aligns. So no alignment, so I'll probably just stick with this one. Or you can actually put it to this one here. So swing low to, or swing high to swing low. Nothing really aligns there. Let's see if this anything aligns here. Nope. So I'll be using this projection here. So we can take out July 3rd low and continue lower to -1.5, -2, and -2.5. But yeah, that's just standard deviation setup there. This London move right here actually is something I wouldn't have anticipated. It's kind of fascinating to see, but it's cool to see that occurring. Let me open up another chart for my S&T. So it looks like we are going to create a fair gap and take out July 3rd low before even getting an entry to. See, so here you're probably wondering why. Hey, why aren't you just taking the trade here if you know that July 3rd is going to get taken out? In trading, nothing is ever guaranteed. That's something that you should always keep in mind, is that nothing's guaranteed here. It's just higher probability a higher probability that we're going to take out this low. But the reason why I'm not entering this as well is because I don't have an entry pattern to enter it. I prefer waiting for, you know, retracements, and like I said, these retracements here, I wasn't awake for them, and even seeing this London move here occur, I wasn't awake for that time window, so there's really no point of me taking a trade here. But I mean, you can always just go back and back test to see if there's anything that you would have taken. Like, is there anything I would have taken here? There's this 5-minute fair high gap. Is there a 10-minute actually? No, 10-minute. So there's that 5-minute FEG. Prices retraces back inside the 5-minute FEG, and previous week's low hasn't been taken out yet. So let's say you entered at the 5-minute FEG. Let's see if there's a 3-minute FEG though. There's a smaller one. There's that 5-minute. There's a 4-minute as well. Alright. Now we retrace back and set the 4-minute. Okay. Alright. See, so it's always cool to just backtest some of these things. Let's see if we could have gotten it. I believe this one we couldn't find anything here actually. But like I said, let's just continue to watch price action, and let's see if I have enough time to play a chess game. We have about 10 minutes left, so I should be able to hop into one. See, so this is why I don't trade the first 30 minutes. For this very reason here. Look at where YM is trading, and look at what NQ is doing. We're completely out of sync. This isn't what I would have liked to see here. I don't like seeing this out of syncness. That's even a word. Look at what dollar's doing. So we took out previous week's low, which was the draw of liquidity for coming into this week. Let's see, and dollar. We failed to take out previous month's high, and we just took out previous month's low last week on Friday. Dixie's now trading back inside a weekly BISI. If we disrespect that weekly BISI, which we where's that weekly BISI? This one right here. If we disrespect it, we should see lower prices. We have displaced away from daily time frames to come into this week. I am anticipating for us to take out previous week's low. So I had that already in mind, and we actually did do that. And so, but the thing is, when dollar's trading lower, we should be seeing higher prices on the indices, which is something I am not anticipating. That should not be occurring. And I do want to see if we can get a closure below this weekly FEG on the weekly time frame, because we can treat this obviously as a breakaway gap. Because I mean, if you've been with me for a while now, you can see why I would treat this. You should see why now I should why this should be treated as a breakaway gap. This daily gap, however, I thought we were going to retrace back inside it with this candle's closure, but this next daily candle, it did suggest that idea. So let's get rid of that idea completely. So dollar, we are seeing lower dollar, NQ is seeing higher, or I'm sorry, NQ is seeing lower, and ES is seeing lower, and YM is seeing higher. We're so out of sync. That's not cool. That's not what I want to be seeing. So let's see what happens at this 15-minute candle here. Are we going to take out this candle's low? Or not candle's low, I'm sorry, July 3rd's low. It looks like we probably are going to take it out. And like I said, no entry pattern to enter it, so there's no point of me testing my luck. The reason why I say luck is because, like I said, nothing is ever guaranteed in trading. I don't like how that knight can jump here. Because if he jumps here, I actually can't do anything about it, and I have to move back. I don't think I can do anything about that, so I'm just gonna leave it like that. If he doesn't take this pawn out, I'm switching my pawn up here, because this pawn is actually strong. I want to be attacking this square. If he takes with this pawn, I'll take here, and then he takes here, I'll take here. And then I have an open file for my queen to attack that angle right there. Okay, so he takes. Now I'm going to attack this. My horsies. My horse. And do I take the knight? So I'm actually, I can take this with my knight, or I can take this like that. And I think I'd rather do that, because I still want my knight to be attacking this here, pressure that knight. Without that, so this pawn's actually hanging, so I'm gonna force this, and then he probably will take with this one. So here, I'll go here. He's gonna take here, or here. Okay, so now this pawn is hanging, so I want to move it here. Okay, he's castled that way. I'll probably move up my knight here now to attack his queen. To attack that queen. Let's see where he goes from there. No. So the draw liquidity is still that July 3rd low here, but like I said before, are we going to be given an entry to actually take out that low? I don't believe so, so I'm just going to sit on the sidelines and watch. Attack that queen again. Continue to pressure. Apply the pressure. I still have the ability to castle, so I should just keep that in mind and probably be castling this way. Okay. I'll move here. He is actually preventing a castle here, so I'll probably scooch my queen out this way, any castle. Okay, that's cool too. I can actually do that. Move here. And then I castle. Oh wait, he can actually, that's a fork. Now I have to move back. Yep. Dang, that's what. Oh man. That's actually sucks. I can't move here. I can't. That's probably my best plan, is to let's get my thing out of danger here now, because I don't like how this is looking for me. I do not like how this is looking. So now I'm down a knight, but I would rather risk a knight than losing my queen, you know? So there's no entry pattern for this setup that is occurring right now. I mean, you can take it at the open, but I'd choose not to, just because like there's no setup. So just be patient. I do want to point out the open though. That's something I do want to note out. So there is the 10 o'clock open, and we just took out that July 3rd low, and now is when I am just tape reading now. There's a 4-hour open. Okay, I kind of anticipated the check there now. I can move here, he takes that pawn, but then I have to, whoosh. I would suggest a trade here. probably suggest a trade. Oh. So there's -1 and there's -1.5. Like I said, how far can we go? So you see how this acted as a breakaway gap just now? At that open, I'm not anticipating for us to, open, take out this rebalance and then take out the 4-hour low. That is not what I'm anticipating. But here, I'd rather just watch what we do, because I'll probably just watch what we do here. I need to be able to fight for this. This is something I don't want to see here, actually. If he swings out his bishop this way, then now I'm in a predicament because I don't have enough resources to be able to fight for that. I can swing out my king, but I'll still be down a knight. There is the -6.2 tap, and there's this rebound. There's this 4-hour rebalance right now too, that we are rebalancing. He can just go here, but no, he can just go here. And then if he goes here, I go here. Now we're gonna attack that pawn. Now this pawn's gonna be protected here. Oh, the fork! The freaking fork, bro. Dang. Unfortunate, because now I have to sack. Which rook do I sack? I think I sacked this one. So I need to attack this, at least threaten it. But if he takes there, then it's as long as I still have this pawn, I'm still winning. But this is losing position for me now, for sure. He takes it. What a predicament I am in. So there's that -1 standard deviation gets tapped. See if -2 standard deviations get tapped here. That pawn's not getting attacked, so let's move here. Oh, freaking, it's lost. Resign. This is an unfortunate game. Alice. It's okay. It's all good. All good. All good, yo. So we did this place here. Like I said, I still have the standard deviations projections. I actually leave it like here because -1 standard deviation basically is next to that low, and this -4 is aligning with this new week opening gap. I really like that, so I'll leave it like this here. Dang, that's just unfortunate. Let's do another one, because I mean I don't really have anything to do here on the indices, so rather we just do something and get my mind going, really work in my mind. I can develop this here, but yeah, I'll develop like this. Okay, he's gonna give me the squares, but that's the thing I should be worried about, is that pawn going up like, oh. So now I can safely take out this. I can play like almost like a London setup here. Now this square will be pretty strong actually if I move up this pawn, because I have basically three supporters. This, okay, I don't know what he's doing, but move this rook here, because I really want to take this square. I think I should just take this square before he moves up this, but still gotta be playing defense, however, though. So he actually give me that. Kind of like a reverse London almost. It's like I'm playing on this side instead. I take this, he takes here, I go back, and this pawn is just I still have a pretty strong piece here now. So now see, this pawn is now hanging, so I can easily take that. Unless he moves up this pawn. Then I just take out that pawn just for now. This pawn's hanging, well, not really hanging, but it's under attack from this and this. So actually getting back up for here is probably best thing to do here. Wait, is this copyrighted? I hope this isn't copyrighted. I hope this is not copyrighted music. says non-copyrighted music though, so. So he takes, I take, he takes. I'd rather have my bishop, push my bishop here. Oh no, now I'm. If he sees it, yeah. Alright, if I go here, he takes. I take. No. Damn, how did I miss that? Sad. Sad stuff, actually. Actually, just retracing lower, or just repricing lower here. Dun 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 dun. -4 is the next projection for me here, but if you really want to see it in actual terms, we can see a complete rebalance of this 4 hour just happened. I'll just be waiting this one out, to be honest. If we can get a retracement, then that'll be cool, but if not, then you know, I won't be taking anything. I don't know if he missed that on purpose, but I'm playing mainly to defend here. That's not what I want to be doing, to play for defense, but I need to protect that square. Trade queens here if he wants. So there's that 15-minute closure. So based on this 15-minute power 3, I can anticipate for this low to be taken, but I don't want to take this because I feel like I want to see us retrace into a 15-minute fair value gap and respect it, because I don't really have any sell side objectives to take. So attack that. If I can get my bishop to attack that because now he has to stay there, or he has to move his queen, king out of harm's way. Sorry if I'm not paying attention to the charts. I mean, I am. It's just they said we don't have much to really do here, base our trades off of. So we can see like a continuation during the New York AM session from the 4-hour time frame. I said we are reaching into OT of this range, so I want to see us like really get down to here until I can clearly say this is the draw. Here. How's, oh man, actually I had like 4. Well, actually, if he just takes this, then here's a trade. Trades now. Now if he takes with this. Oh shoot. Because I still have this line open for me. I still pretty much very okay. I'd want this line to be available. Yeah, he has to really be careful of getting checked here. Because I don't want to. This isn't something that I'm just gonna be trading back and forth. Actually, I just go back and forth. Okay, he's trying to bait me. Gosh dang it. Gosh dang it. Gosh dang it. Oh my goodness. Peter, I just lost the chess game, bro. I trolled. Brother, I just lost the chess game. Oh my goodness, I want to see what I did wrong. Oh, what's up? Oh, what's up, Debbie? I don't know how long you messaged me before. How long it's been, but I was just I don't have chats pulled up, so I don't really see your messages. My bad, bro. Dang, bro. Oh man, dude, that is what an unfortunate game.
Did you lose by time?
No. That was just an unfortunate turn of events. Very, very unfortunate. Oh gosh. Yeah, I left my head. I know, bro. Oh snap. Well, the thing is, because why am I taking that here? Take that pawn. I take that pawn. He can't. Okay. Oh my gosh, I am actually super screwed here in this position. How could I just oh. Man, it's because of that move. Oh my goodness. Excuse me. Hey, it's pretty nice seeing someone join the live stream, you know? I've been doing this for like, I don't know how many days straight now, but it's good to see you, you join, Debbie. How's your trade so far, man? Did you take anything? I'm gonna pay attention to chat now. This is for sure. I'm gonna pay attention to chat. I'll not pay attention to chat, but I'll make sure that, you know, I'll keep in mind that there's someone actually in there. Okay, so I want to see us retrace into this 15-minute fair value gap if we can create it, and if we show signs of respect to it, then I'll consider taking a trade. But I do want to see us close here first before I say anything. But yeah, let's just see how we close here first. Because this is a 30-minute here, and if we treat the if we apply the fair value gap theory to this 30-minute here, this 30-minute fair value gap here should be a breakaway gap. If we close, that's if we are to close right now. But like I said, we still have about like 5 minutes and 30 seconds left to for prices. So I would like to just wait that 5 minutes. This is just part of the way I trade, and it's just being patient. Oh my goodness! What is this? Why is there Coca-Cola in here? Who did this? Huh? Where's the Christmas tree? What's this new Christmas tree? Dude, you should have watched chess game. I literally I was winning, and then I was losing, and I was winning. And then what's that word? I fumbled. Like, what is the word here? Whenever you mess up in chess. Blunder. I blundered. My question is that why are you using my account? Because I want to, my boy. I'm just kidding. I don't know what my login is for my other account, so. Fuck, still have 4 minutes left.
I don't have a login.
Hmm?
I don't have a login.
Why don't you get a login then, my boy?
I don't have a login.
My boy, why don't you get a login then, my boy? Let's see what we do in this 15 minute, I mean not 15, in this 3 minutes and 30 seconds. What are we going to do? Bro. What did she offer me? $11.50. $12. Is this person scamming me? Is she scamming me right now? Are you serious? Should I go over the trade on Monday before? Let's go over the trades on Monday actually. So on Monday, oh yeah, this is the pretty good one. Completely violated this hourly FEG here, so no signs of respect to it. One 15-minute, 30-minute, and 1 hour had the same objective, which is to take out their respective highs, right? This 15-minute fair value gap could be treated as a breakaway gap if you just base it off of my fair value gap theory and why it should be treated as a breakaway gap. On the 5-minute time frame, there is a fair value gap, so there's a 5-minute fair value gap, and our draw liquidity as of right now is still to take out that previous day high. So I set up my my entry and stuff. I enter at the 5-minute FEG, and this is my original setup here. To risk basically a 1-to-1 RR, 17 micros, $480 stop loss here, and my target here is that 15-minute high, 30-minute high, and 1 hour swing high, and we do end up taking it instantly, and I was able to hold my trade till -2 standard deviations. Really good trade actually. That was a perfect trade. The 3 trades this week so far have been pretty good actually. Like yesterday trade, the trade from yesterday actually was a perfect A+ setup. I cannot believe I did not take it, but stuff happens, so stuff happens. And there was another one from yesterday. I was actually like looking at it and had the setups, had the position like set up or anything. All I was waiting for is my limit order to get tagged, but it never got tagged because I had my limit order at the 2 o'clock open, just so I can mitigate risk, because the risk I would have been like original risk would have I would have taken was like a 0.64 something RR, which is not very optimal. Okay, so we just had that 30-minute closure here. So now, based on that 30-minute time frame, we can anticipate this 30-minute low to get taken and this 30-minute FEG here to be a breakaway gap. So I'm anticipating an open, high, and then low. I don't anticipate an open all the way, and we open, we retrace into that 30-minute FEG, and then we take out the low. That is just how I'm viewing it as of right now. It could change, but like I said, we would have to show respect to this 15-minute fair value gap, because if we don't show respect to it, then this 30-minute fair value gap is not going to be a breakaway gap. I want to see us take out this 30-minute low before we retrace inside this 30-minute fair value gap. So let's see what we do at this 15-minute fair value gap. I want to see us trade away from it, and if we don't get an entry, then we don't get an entry. But this is going to be, I'm going to mark this out as 30M low, so 15 minute and 30M low here. So that is my draw as of right now. I'm going to mark out the opening price for 10:30. This fair value gap here is the 15-minute fair value gap. So let's mark that out. So this is a 15-minute fair value gap that I want to see prices respect. And sorry, excuse me. Okay, so let's see what we do from here, if we can retrace into it. And I do anticipate this fair value gap to be a fair value gap that we retrace into, because based on my fair value gap theory. But yeah, there's that. Wow, we have actually a decent amount of people now, members on this channel. We have 23 to 6 active, or I'm sorry, 23 and 3 active, so 26 in total. Now all that is left is to just watch price and see if we can retrace into that 15-minute fair value gap, which I am anticipating for prices to do, and if we respect it or not. Wait. I'll just kick back to the 15-minute time frame again, so I can get a better perspective on what is going to happen. So like I said before, we have to see respect to this 15-minute fair value gap if we want to see lower prices. I want to see my trade setup play out, or not play out, but occur, if I'm going to take this trade or not. If it doesn't occur, and let's just say something like this happens, we retrace into the 15-minute fair value gap, right, and we displace and we take out the 30-minute low before getting a some sort of, like, you know, we retrace, displace, and then a small little retrace again, and then take it out. I want to be trading this portion, that portion of the leg. I'm trading this little portion right here. But if we don't get it, then I don't take it. But what I am anticipating is, you know, retrace into the 15-minute fair value gap, and then a reaction to it, and then we take out 3-minute low, either whether it be like this instantly, or we retrace into that 15-minute fair value gap, displace, leave the 30-minute intact a little bit, retrace again, small little retrace. This is because like I said, prices are fractal. So either scenario 1 here, well, there's actually 3 scenarios that could play out, or 2, and we have scenario 3, which is we open at that 15-minute fair value gap and we close above it. That is something that, you know, could happen as well. So those are the 3 possibilities for that could occur right now. So it's either scenario 1, scenario 2, or scenario 3. A lot of if-then statements. If we respect this, then this should happen. If we don't respect this, then no, scenario 3 will happen. So let's just take a look at what scenario is going to occur here. Scenario 1, scenario 2, or scenario 3. I'm gonna, damn, it's like a video game almost. I would suggest an scenario 2 to happen, because that's actually what I want it to do. But like I said, prices, I mean, I'm fluid. Like I'll accept anything, but like I said before, if we are to see lower prices, I would like to see us respect this 15-minute fair value gap. If not, then most likely a retrace into this 30-minute fair value gap, and yeah, we'll see from there. Ooh, yeah. So let's just leave this up for right now. So like I said, the 15-minute fair value gap should be respected if we are to see lower prices, and I want to see displacement on the lower time frames. That supports the idea of us really, that supports the idea of us, hey, we are really bullish, or sorry, not bullish, but bearish. So we have about like 8 minutes left on this 15-minute candle, so we'll see what we do there. Hey buddy. Hey buddy. Dude, I woke up today and I had a nosebleed, bro. Doom 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 doom. About 7 minutes left till the 15-minute closure here. We'll see what we do from there. Should we? I don't want to do it. I want to, but at the same time I don't, because I don't want to miss anything. Oh, let me go over the daily quote for today. We have, if you make your internal life a priority, then everything else you need on the outside will be given to you, and it will be extremely clear what the next step is. Gabriel Bernstein. What I'm interpreting from this quote is that within you is a world full of possibilities, and if you just nurture your inner self, then you'll find greatness from outside of you. Growth comes from within. That's a quote I feel like that you can relate to this here. Growth from within is actually a quote from Vagabond, and it is a book that I really enjoyed reading. It's a manga, so I don't know how you guys feel about mangas, but it's a really good book. And yeah. Let me do some of my other stuff that I have to do on stream. So let's see, review May trades. Let's review the May trades, shall we? Oh, whoops. There we go. So May 3rd, did we take anything on May 3rd? No. Wait, actually we did. Okay, so this is the beginning of May. Wednesday, market analysis. After taking out previous day low during the London session, we began to slowly drift lower. We displaced back inside the range and had a higher time frame market structure shift. Here, this is on the 15-minute time frame. So yeah, this is the market structure shift I'm talking about right here. So you can tell the growth I've had just based on the based on what I have structured out here. On the 5-minute time frame, we had a bullish structure. We had bullish structure that would support prices higher. 5-minute breaker, 5-minute OB, 5-minute, 15-minute inversion, and 15-minute fair value gap. I don't use literally 3 of those anymore as entries. I just use them as confluences.
Sorry, is this yours?
Yeah. But Peter, I literally just left it in the room, so you guys can have that. Oh, I think this would have been the entry right here. This 5-minute fair value gap. I can just tell by looking at it that this 5-minute fair value gap probably aligns with this. See how far we traced. Yeah, that aligns with this 15-minute power of 3 here. So after that reaction to the 15-minute fair value gap, we had a 15-minute power of 3. We have a 5-minute fair value gap to target that.
Hi. Is Mark Rober in chess?
I don't know what that is.
That's Mark Rober.
Who's
He's
it?
a YouTuber.
Oh.
He literally makes no cheat. Yeah.
Yeah, so that's my very first major. The May 2nd one is we took out previous day low during the I just remember something. Let's take a look at what our TH gap looks like. Oh gosh. Okay, so yeah, we had a pretty big gap down. Alright, so where was I at? Here. Higher time frame narrative, we already took out sell side liquidity, start creating structure to start the next move. We closed above a 15-minute CB on the 15-minute time frame, turning into an inversion level. So what do I mean by that? Oh, this one. We took out previous day low. We had displacement back inside this range on the 1-hour time frame. We did not close back below the 15-minute inversion fair value gap after we took out sell side liquidity and closed above it. So now it's just time to find an entry. That's about it. I do believe that the entry I would have had. This is weird because like I said, I'm not using the same way I trade back then here, so here's another one. This is actually another one on the during pre-market session. London highs is still intact and Asia's highs is still intact as well. We have a 15-minute fair value gap here on the 5-minute time frame. Dude, it's really all over the place, to be honest. I can't see where. Oh, I remember this trade. I actually was able to get into it up here. I had my first entry right up here, and let me see if this aligns actually. Yep, my first entry. Yes. This is the first entry here, and I believe this is also a 3-minute fair value gap too. So just to target that 15-minute power of 3. Wait, hold on. We took out 15-minute power of 3 already here. Yeah, we took out the 15-minute low actually. Okay, so why did I... Okay, so there's that one. I don't think I would have taken any trades here, to be honest, too. Then May 14th, we had okay, so this is now where I start paying attention to the power of 3. So 4-hour power of 3 and 1-hour power of 3 here. We closed above a 50-minute inversion fair value gap. And we also retraced during the 10 o'clock open before taking out any previous week's high and buy-side liquidity. So we have higher time frame draw. And okay, yeah, that's not bad. Do we have a sort of setup still? That would suggest the idea of us going higher. Just purely off of this inversion and breaker block is something I wouldn't have traded. Yeah, let's see what May 15th allow. Okay, this is on CPI, so CPI actually gave us pretty good price action. So okay, let me look at the actual charts here. So here it looks like we are getting some sort of reaction to the 15-minute fair value gap. Like I said, scenario 1, scenario 2 here. So it can either be scenario 1 where we just instantly take out the 30-minute low without giving me an entry, or will we have scenario 2 where we get my entry. It all depends on what we do here. And like I said, in like 12 minutes. So in 12 minutes, we'll see what happens. Hey, I got another subscriber. Let's go. Let go. So let me go over CPI because I do believe this is pretty good. So during the London session, prices retraces into a 1-hour fair value gap. You can note that here, right here, and we expanded away from that 1-hour fair value gap with CPI release. We still had this buy side level that we haven't taken out yet. What's up, boy?
Can you watch the movie that you were watching yesterday?
Yeah, watch that at nighttime, my boy. It's still pretty early, so let's watch it later at night. All right, so we displaced away from the the 1-hour FEG on the 15-minute time frame. So we displace away from it. That means in the leg up we had a fair value gap. That's literally what displacement means. It's that leg away from whatever level you're referring to. That leg up or leg down, it has fair value gap into it. And in this case, we had BISIs, which are buy side imbalance, sell side inefficiencies, denoted by that really big gray box right there. So that is a fair value gap. And just purely looking off at this picture here, note how we react to this consequent encroachment of this 15-minute fair value gap. And on the 5-minute time frame, look at how we react to the RTH gap. So whenever we are bullish and we have a gap update, whenever we do retrace, if we do get a retracement into that RTH gap, we should only be trading towards the consequent encroachment. Like I said, you can apply that with every single gap. And an RTH gap is a gap. It has gap in its name. So like I said, notice the reaction at the consequent encroachment of the 15-minute fair value gap and the RTH gap. Okay, what is happening on prices right now is we are actually trading lower here. I do want to see prices if prices can give us an entry here. But if we can't get an entry, then I just completely missed the trade. Like I said, either scenario 1 is going to play out or scenario number 2. So let me push all of these scenarios. So this is scenario 3 here. This is scenario 2. Scenario 2 is the scenario that I'm hoping for prices to give me. If we don't get it, then we don't get it. And this is scenario 1. Scenario 1 is basically we retrace into that 15-minute fair value gap and instantly take out the 30-minute low without giving me an entry. Scenario 2 is prices retracing into that 15-minute fair value gap, displacing away from it, doesn't take out that 30-minute low yet, retraces, and then takes out the 30-minute low. That is what I am hoping for, but if it doesn't give it to me, then it doesn't give it to me. But yeah. So going back to the CPI trade, like I said, we are looking extremely bullish. We respected the consequent encroachment of the gap, 15-minute gap, and you want to pay attention to this power of 3 here. This candle's power of 3. Just based on that 15-minute candle's power of 3, I can anticipate, or not I, but we can anticipate that the high should be taken now. So on the 1-minute time frame, we have a 5-minute fair value gap that prices retraces into 5-minute fair value gap, and there's that 5-minute fair value gap shown on the 5-minute time frame. IOFED it. I forgot what that stands for, but institutional order flow entry drill. It's a really big saying. So we IOFED'd it, and we take out 15-minute highs. So this is a trade that I would have taken over and over again. Tap into that 5-minute fair value gap. My first partial would be at that 15-minute high. My hourly high would have been the next TP and external range liquidity. So pretty solid trade. I can hold my trade here based on how this 15-minute candle closes, and yeah, it's overall pretty good trade. This is an A+ setup. I really do like this setup in general. Like, very nice setup, because like I said, the reason why I think this is a really nice setup is because we still had a higher time frame draw of liquidity, so we still could go higher on the higher time frames. And when you align the lower time frames with the higher time frame objective, it just gives you so much more of a boost. So there's that. And looking at what we are doing here on the charts now, like I said, is scenario 1 gonna play out now, or scenario 2? It looks, if we just based on this 5-minute closure here, it looks like scenario 1 is gonna play out, and I'm not gonna get an entry to attack this 15-minute and 30-minute low. And like I said before, if we don't get an entry, then it's completely fine, because like I said, I tape readed this, and like I said, and I would take this trade any other day. It's just if we can get that respect or not. So there is that retracement there. But I'm waiting. I want to wait for this next 15-minute candle closure. So I'm gonna wait for this next 15-minute candle closure, and take a look if I can take that trade or not. But let's see. 30 points. Jeez, Louise. So I'll just have this snap. I can't show you guys my credentials now, can I? Okay, so let's mark out the 5-minute FEG here. So we tapped inside that 5-minute FEG, and there's that 30-minute low. So I'm gonna have my setup like that, and I'm risking 480 because it's a 1-to-1. So see, 15 contracts, no, 10, 8, no, 7 contracts I can do. So I have it set up just like that, so we can have at least a 1-to-1. 3-minute FEG is it 4, 2. Okay, so I'm just gonna have my stop loss like that, and yeah, I'll be targeting the like I said, the 15-minute low, 30-minute low, and appears like we could attack the 1-hour low as well. But let's see if we can set up any standard deviations here. This swing high to swing low. Do you have anything that aligns here? So we have that alignment with the new week opening gap. So I would take off 4 at this initial one and 3 at this. So let's do 4 off here, and I'll have 3 contracts left. So 2 and then 1. So 2 off here, 1 off here. And like I said, let's just practice composure, and I'm not gonna enter it yet because like I said, I want to wait until the hourly closure in about a minute or so. So if prices can get that to me, then I'll take it. If it can't, then it's cool. I know. So this is literally this appears to be scenario number 2 playing out now. So let's just stay calm and see if prices will give me an entry or not. But if we do end up taking out the 30-minute swing low, I'm gonna probably close the what you would call it, the stream for today, and call it a day, because I don't want to be waiting on here any longer. So here, let's put the here now down here, because we have about 7 seconds left. 2, 1. So there's my entry, and there's my stop loss. My stop loss is 469, which is aligned with my risk management here. $480 maximum stop loss if it's a 1-to-1 RR. And now it's a matter of time if we can get a retrace into that 5-minute FEG or not. If we don't, then we don't. And here's what's gonna happen on here's the NQ chart. So like I said, based on this 30-minute and 1 hour and 15-minute, I can see us taking out the lows, like the respective lows, and this hourly FEG here on NQ should be treated as a breakaway gap based on my fair value gap theory. Notice how we close, so I anticipate for us to create a open high and then
low. So I want to see us take out the hourly low first before we retrace inside this 1 hour FEG. So I don't want to see something like this. That is less probable than this occurring first. So if we do take that the hourly low, then we can, you know, see something like you know, a retrace. But I don't anticipate this happening. So now it's just a matter of time if we can get a entry or not. If we don't get an entry, then I am completely fine with that. I just have to be content with what I am given. And if prices doesn't allow that, then it doesn't allow that. Here's the 5-minute FEG. So we did get a tap into it once already. It's just, can we get another tap into it again? And let's mark out the 11 o'clock open. So I am entering on the micro, not the actual mini. So let's just see. I'm gonna go get some food. I smell something brewing outside. I'll be right back. So no retrace inside that 5-minute fair value gap. Or for the second time, I guess. So some people could have taken that entry at that 5-minute, the first one, but like I said, I wanted to wait for the candle closure. It just, that's just part of my rules. I'll go to it here. Rules. Wait for candle closures. I had to wait for a candle closure first, so we just took out this 15-minute low here. So it looks like we are probably going to take out this 30-minute low now too. So if we take out that 30-minute and 1 hour low, I'm not going to take anything. I am not going to take a trade. That is something that I strongly believe in, and I'm going to follow my rule sets because I am a disciplined person before I am a trader. Okay, so look what we just did there. Just took out that hourly and 30-minute low, right? My objective for that trade has been taken. I wasn't a part of it. So scenario 2 played out. Scenario 2 played out, but I was waiting for the candle closure, so I didn't actually enter at the first time. The first entry here, which is, like I said, it's cool. You know, I've just understand that there's gonna be a lot more setups that will happen throughout this span of my trading journey. So yeah, and probably with that I'll end off today's video, or today's live stream, I guess. And I thank you guys for watching. Debbie, thank you for watching, and yeah, I'll